welcome on board KR Senthilnathan as well. He's a Director Investments at NAFA Asset Managers. Hi, thank you so much for making time and speaking with us. I was just going through your top holdings and I see a lot of these building material kind of names, whether it's KR Industries, Polycab, Green Panel, Serra Sanitary Ware, etc. Talk to us about what's your rationale here and what kind of upside do you see?
Thank you for having me today, Noon. First of all, as per the Sebi regulation, the stock discussed will be maybe in our client's portfolio. The reason behind holding all the construction material stocks is something like, say, all the rate hike is more or less done. So expecting the rate to fall both in India as well as in US. And when the rate fall happens, these construction material stocks and banking and all the real estate stocks and real estate related stocks will continue to do well. And if you have to go by the past history, and that has done well, and that's why we are holding all these stocks. So Green Panel Industry is one of our top holding, mainly related to, they are mainly into MDF manufacturing and mainly related to real estate business. And once the real estate aids, Green Panel Industries and the MDF usage will continue to go up, and hence the earnings may go up. And these are all the reasons behind holding the Green Panel Industries. And with respect to KA Industries, KA is predominantly into cable manufacturing. They are both into B2B as well as B2C manufacturing. So in the B2C, they are slowly gaining their market share, whereas in the B2B already they are established. And in the both the segments, they are able to maintain the growth, and the margin has been consistent, and hence the free cash flow. And using the free cash flow, they will be able to repay the debt as well. So all these things have given the re-rating of the stock, and these are all the reasons behind holding the stocks.
That's the thesis behind all of these names. When it comes to financials, you did talk about the fact how they are also likely to benefit in this cycle, but I only see ICICI Bank as your top pick. Why is that? And are there any other financials that you would want to add or you're looking at this point of time?
So ICICI Bank, I mean, like when compared to the market leader, obviously they are going much faster than the market leader. They have grown, even the last quarter also, they have grown at close to 28%, vis-a-vis HDFC Bank of 20%. And hence, I mean, like the premium which the leader used to command has been reduced. And today, ICICI Bank and HDFC Bank are more or less at a same premium or same level of valuation. And that's why we are holding ICICI Bank. Normally, what we have seen in the past cycle is like during the rate hike cycle, banks used to, I mean, like perform well. And during the rate down cycle, both banks and NBFCs used to perform well, and NBFCs normally used to perform more than the banks. Given today's scenario, already all the banks have run up, and NBFCs are for a due. And if you expect a rate cycles to pass, and then from there onwards it is continue to go down, I think NBFCs will do well, and we do have NBFCs. Predominant NBFCs are Bajaj Finserv and Chola Finance. These are all the predominant NBFCs. We hold it in our portfolio.
Those were the top bets coming in from the financials, and you're looking at NBFCs as well. But what about real estate directly? Are you not looking at playing some of those real estate names, you know, Godrej Properties, Sobha, etc.?
No, we are better off playing the real estate through the other means, not directly through the name. I mean, like main companies like Oberoi or Shobha or Prestige for that matter. So we want to play through the related sectors, something like say Green Panel or the other construction materials. So, and that's the thought process behind us, because we have seen those are all the, I mean, like the margins may not be sustainable or margins may not be consistent in those sectors. Whereas here, when we play through Green Play or Green Panel, which is a real estate aided sectors, and margin has been, I mean, like comparatively consistent, and they will be able to make ROCE and free cash flow. And those are the thought process begin.
Now, what is making a comeback? Good old Patanjali, owned by Baba Ramdev. That is the one which has made a comeback. Let's look at the intraday graph of Patanjali. And this is one stock which frankly is way below its 52-week low. Way below its 52-week low. There's no GQG here. It went up in the, there's no one buying there. Actually, just, you know, there are concerns in the company, which is that what will happen to the promoter has to dilute their stake as per the Sebi shareholding norm, which they've not done. And I don't think they've got a relief on that, so that markets know that that extra promoter holding is going to be coming. In generally, whatever they had communicated when they did their FPO, which is that, you know, we'll have this percentage growth, we are going to be growing after we merging our food portfolio and other things, none of that has actually translated into reality. So look at that stock. Markets are very smart in recognizing that. It's nowhere close to its 52-week high. The
Barely
52
any
week
volumes.
barely any volumes, but today it's going higher. I mean, my only concern today, if I look at the screen, is that there are a lot of stocks which you don't want them to go higher. They are the ones who are going higher. For example, to some extent, Patanjali Food. I would also say even some of those penny stocks which have now started regaining momentum, and that's always a worry for me, Kunal, right? You look at the screen, the penny stocks, they've started doing carnival again.
Yeah, I think few of them, not majority of them. I think maybe a couple of weeks back there were lot many stocks which were actually moving up 10%, 20% higher, but then the number of stocks have dropped down significantly. But yeah, I think Patanjali specifically, that stock I think is also on the trade to trade group, which is in the ASM series, and that's why the volumes tend to drop off into these stocks and the trading activity drops down. So it's only for players who are ready to buy the stock and hold on to it from a delivery basis. That's where we see the impact of volumes coming back into these names. But because of the way the stock charts have shaped up, I think it's very difficult to try and expect that these stocks would do any kind of a major recovery over the near term.
Senthil, when you are betting on this entire home improvement theme, what are you assuming would be the growth rate for this sector?
So the growth rate for the sector, we are expecting close to some 13 to 15% growth rate in that sector. Predominantly, that is what happened in the last quarter also. Overall, if you look at the overall corporate India, so far approximately some 1,600 companies have posted their results. And the top line have grown by around 13.9% and the bottom line also close to that number. So, and even the home improvement sector also, slightly above the sales growth of the entire corporate India. So broadly, that's what we are looking for: 13 to 15% top line growth, and something like say 15 to 17% bottom line growth in the over the next 50 years.
Trading at P multiples of 30, 35, even some cases 40 plus. So does it make sense to pay P multiples of 30, 35 for a sector which is growing at 14, 15, even 16%?
So with respect to Green Panel, I think it is already trading at only 20 PE. And apart from that, they are generating a cash flow of 360 crores. And the market cap is close to 4,000 crores. The cash flow yield is approximately 8.5%, whereas the treasury yield is approximately 7%. And in the past, what we have seen is whenever the small cap stocks CFO yield is much more than the treasury yield, normally the stocks tend to give a fantastic returns. And that is, I think, those kind of scenarios can happen in the green panel industries as well. Apart from that, as you said, there are some other stocks in the home improvement sector which are trading at a higher multiple. So those things we have to, decide based on the stock to stock basis.
Right. A couple of other spaces which are actually a buzz in trade right now. So let's just mark them. And you are seeing Balkrishna Industries hold out. There's Bandhan Bank, which is looking smart. Delta Corp, after a while, has actually made a dash. That stock is holding up about 6%. And of course, MCX also, like we highlighted, is looking strong as well. On the flip side, though, I think the first time in about 3 odd weeks, you are seeing some of the mid-cap IT names take a bit of a pause. So Persistent, LTIM, they're all seeing a bit of a downtick. Persistent is down about almost 2%, over 2.5% cut coming in for LTIM as well. There's DLF also, which is lower by about 2% as we speak right now. And then BEL2, which is down by about 2.5% as we speak right now. Senthil, I don't know whether this is a space that you're invested in or not, but today morning we had Prashant Jain join in on the channel, and he was talking about as to how he sees under penetration when it comes to power, and that's a contra play that he's really intrigued by and would recommend. I don't know, what are your thoughts here?
Yes, I do agree. We are also invested in the power sector, but not directly on the power generating companies. As I said, KEA Industries is one of the proxy players for the power industries, because the cables, the high voltage cables or extra high voltage cables are supplied to the power companies by KEA Industries, and they have a very strong presence there. And apart from that, we do have Hitachi Energy, which is which is a demerged company from ABB Power. So they are into automation of the power grid. So there also we have invested. So those are all the, through those companies, we are playing the entire power sector, because we do believe that power sector is, a lot of investments required for the power sector. And there are some other, there are stocks to play on those things.
Okay, Senthil, on that note, we'll let you go. Appreciate you joining us on the show today. For